Hey traders, welcome to Charts and Coffee. Happy Friday, everyone. Happy PPI Friday. Very interesting reaction to that PPI number this morning. Now remember, we're actually looking at the aftermath of yesterday's slightly hotter than expected CPI, which I would say, generally speaking, would be a more important number than the PPI. But nonetheless, when that PPI comes in at a 1.0, when the forecast was 1.3, it sort of offsets, it sort of tempers that PPI data, CPI data from yesterday, and that sort of panic sell off, the weakness, the target rate probabilities for March starting to come down a little bit in terms of that massively expected rate cut in March to come. All that sort of simmers down, and traders get back to business of, all right, one CPI print doesn't undo what is expected to be a dovish central bank this year in 2024. And remember, again, we always want to look at, when we are looking at data, it can't be what we feel, it can't be what we think. We're not doing anything other than what is the data, right? Always, always, always. As we kick off the Simpler Central room next week, I'll be in there with you all Tuesdays and Thursdays. And we'll be definitely covering things like macro and day trading and swing trading. And what a perfect time for it, because twice a week we'll be able to touch base on what's happening in terms of Federal Reserve expectations. And again, we're going to always root it in the data. And if you take a look, for those of you that were looking at this yesterday and looking at it now today, notice how in the aftermath of that PPI, here comes that expectation from about 60, whatever that was yesterday, 65, 63%. Here we are, 8 or 9% higher already on PPI. Gang, the Fed is going to cut. We just don't know how many times. We don't know when it's going to start. But for now, March 20, so that's still pretty far away. But March 20 is still very much what we're expecting. So we'll go from the 5.25 to 5.5 target rate down to 5 to 5.25, which is a quarter point less. Come May, 72% expectation for another quarter point rate cut. And then when we get to June, this is where it gets interesting. If we're going to be in May at 475 to 500, another quarter point rate cut would be 450 to 475. Guess what? If you look at where we are expected to be come June, it is still one, if not two quarter point cuts, even below May. Gang, the Fed is going to cut. And if the Federal Reserve does not like what these data points, what this target rate probability based on a futures contract, the Fed Fund Futures is saying, believe me, they will come out. They will sound less dovish. They will try to, temper the expectations. And so trust the data, stick with it. Believe me, the Federal Reserve knows exactly what these contract months for the Fed Fund Futures are doing. They know exactly what the target rate probabilities are. So that's the way that PPI lands. We don't look at PPI from the standpoint of, well, I'll show you what I mean. We don't look at PPI from the standpoint of, oh, it was flat previously and we're expecting 0.2. What does 0.2 even mean? Not much. What we're looking at is how is the ultimate result being responded to. So you can see here, core PPI 0, and then PPI negative 0.0. And then for those of you wondering, Rag, what the heck is a PPI to begin with? This alphabet soup of data that we deal with. It is a change in price. So think inflation, think consumer, right? It is a change in price of finished goods and services, excluding food and energy. I think core numbers are usually kind of garbage numbers. So I usually ignore the core. I'll look at the one that, because really, who needs food and energy, right? They're going to, when they pull the data, excluding certain things, it always cracks me up. And they say, well, we're trying to, level it out. Those are really volatile because, gosh, who needs food and energy, right? You and I don't need food and energy. Who needs food on the table and the lights on? Nobody. So there's your PPI response. It definitely offsets a lot of what was happening with CPI. All right, that said, let's jump into the charts And as always, if you have any questions, phone lines are open for your requests. Just a quick summary in terms of our Sector Secrets Mastery positions. We've had quite a few swings this week. I think 6 trades in total, a lot of day trading as well. We're going into today already long Freeport, Moran, Johnson & Johnson, Dow, as in DOW, not the Dow Industrial, Target. So we are not focused solely on tech. In fact, my one sole tech yesterday, we ended up taking a paper cut on Microsoft, which is fine. Take a small loss when you can, not when you have to. But if you take a look at, what we're focused on, I'm not necessarily focused on tech or semis. We are looking at some defensive corners of the broader averages, and a lot of interest in basic materials and healthcare. Healthcare is absolutely benefiting from sector rotation so far this year. So we're looking pretty interesting. All right. Next up is, oh, that's right, gang. By the way, I do not want you to miss it. This is the last day, I believe, of the 30% off. So if you've been kind of putting off, hey, Rog, I'm kind of curious about the HPMRs, the DPMRs. I'd really like a deal on the subscription. Please take advantage of it. It's basically a third off. So I'd feel awful if you missed it and it's something you've been thinking about trying. Okay. BLP asks, I recently joined Sector Secrets. How can I make sure I get alerts from the live session? BLP, really easy. The first thing is, if you have the room open, if you're near your laptop, computer, iPad, whatnot, iPhone, smartphone, whatever, if you're in the room, those alerts are sent out. There's an audible cash register. Who doesn't like that sound? And that's one way. The other way is download the Simpler Trading mobile app. Once you've downloaded the Simpler Trading mobile app and allowed notifications, anytime that I send out, whether that be an alert, whether that be a target alert, whether that be a video or a bonus session notification, you will get it. So Simpler Trading mobile app is probably going to be the best bet. That way, whether you're at the computer or not, you are covered. All right. Alex asks, and by the way, welcome, BLP. Thanks so much. I can't wait for you to get to know everybody in the room. All right. Just curious what the rates are given as quarter point. Oh, why? Because that's the increment within that the Federal Reserve uses. The Federal Reserve uses 25 basis points or a quarter point when they're hiking or cutting. That's just the smallest move that they can make. There's no eighth of a point. They can move in half point increments, but typically it's a quarter. All right, dimed out. My burning question today. All right, what do we have? What is the exact name of the indicator I use to represent the colored bands? The colored bands. Are you talking about the red and green bands? You're talking about the lower colors in the bottom? Let me know, and dimed out, I'm happy to answer. But real quickly, just to cover my bases, the lower rows, those 2 rows of colors, is called the multi-trend. By the way, that is an indicator that we do give to members of the Sector Secrets Mastery on day 1. If you're a Mastery member, that's included with your membership. And then the red and green, or the gold and gray, those are the hourly price movement ranges and the daily price movement ranges, respectively. Other than that, I've got some moving averages. I don't have Bollinger Bands on my chart dimed out. So again, not really sure. But if you're talking about the red, blue, and green, those lines, those are 34-period exponential moving averages, also called the wave. All right, next up is San asks, Tesla. Okay. Y'all know I don't trade Tesla, right? That's kind of an open joke around here. I don't trade Tesla. I don't like the stock. Cool cars, I guess. But yeah, and I know a lot of people say, oh, Rog, are you kidding me? I hate the stock. Here's why. It's included in the S&P. It's included in the NASDAQ, but it doesn't move anything like them. So remember, if you're going to play the craziness that is Tesla, which was completely disconnected from the S&P and the NASDAQ most of 2023, it's still off doing its own thing in 2024. Be careful. Now, folks who specialize in Tesla do very, very well. Remember, you're trading on an island called Elon. All right. Uh, Further downside, oh, here's where I would say, San, again, the reason I mentioned I don't trade it is because if I don't have skin in the game, I'm really not paying attention to it, am I? So for me to give you analysis, it's just going to be, what I see on my screen. I would look for an area between 219 and a half to 215 and a half for support. It is below the 200. However, it is neutral trend. This is important. There's a lot of talk about momentum and trend. How are you measuring momentum and trend? What are you using to say, hey, there's bullish momentum, neutral momentum, or bearish momentum? If momentum persists long enough, it turns into a trend, but you need a way to measure both. And so if you take a look, Tesla has bearish momentum. That's the red dots on the upper row of this multi-trend here. I should grab my drawing tools because it'd be nice if I could highlight these for y'all. Okay, bear with me one moment. Okay, here we go. So here are your red, right? This upper row, and then the bottom row is neutral. Okay, that's a bearish momentum neutral environment that, by the way, in a yellow or neutral environment, I'm going to use a slow stochastic. There's just simply no better way that I've ever found to find overbought and oversold in the context of a chop, which is, by the way, the only time we should be thinking about overbought and oversold. In the context of a trend, it doesn't make any sense. Is this trend overbought? Uptrend? Is a downtrend oversold? Remember, trends are inherently imbalances, right? They are imbalances, hence the follow through in one direction or the other. Overbought, oversold is not the correct lingo for an environment like that. No more than you want to grab your putter and head on over to the tee, right? Gang, here's a really simple guideline. Just as we would not use one club to get around the entire course, if we're golfing, no more can we have one indicator or one strategy. That's a noob mistake, right? It's a very noob, inexperienced trader mistake to say, oh, this one thing is going to get me through all the different personality, market behavior, price, volume, volatility behavior of a market. It's our job, as a good golfer would, as a good fisherman, woman would. What is the water temp? What am I fishing for? Am I in the ocean? Am I casting a shoreline? Same with a golf swing. What's the distance to the pin? What's my lie, etc. Remember, that's going to be the first thing. So that's why this bottom row of colors is so important. It helps me figure out the lie of the ball. Yeah. So as far as further downside, I'll say, keep an eye on some support levels, but I'd be frankly looking for an oversold buy. So I would favor waiting. Let's let the sellers do what they will, or shorten the time frame and look at a 1 hour chart. San, take a look at the structure of the 1 hour. The 1 hour would be a perfect candidate for short the rip. Maybe day trade it, so you can just look at it today, and then on Tuesday look at it just for today, right? Shorter slice of psychology. I would look for an oversold buy using the slow stochastic and the daily price movement range on the daily, and short the rip on the 1 hour. So depending on what you're looking for, find the time frame that has the structure that justifies that strategy that you're looking to take advantage of. All right, next up. All right, Mike asks, we all know a Pitbull low, a risk reversal moment 8 days before monthly options expiration. However, it's a tendency, by the way. So for those of you who don't know, one of my favorite traders from Market Wizards was Marty Schwartz. Marty Schwartz's nickname is Pitbull, and the Pitbull low comes from this particular trader. In fact, one of my favorite trading memoir type books is likely Pitbull by Marty Schwartz. Definitely a good one, a good read, good short read. Perfect for this long weekend. However, those Pitbull lows can become Pitbull highs in a bear market. Oh gosh, Mike, that's a generalization that I frankly can't comment on. I don't have the data. Here's what I'll say. Let's bring up a calendar. You bring up a great tendency. I love this tendency. If it can tie in with price, fantastic. So we're going into options expiration next Friday. For me, this is the last day of the Pitbull phenomena. So this month, I'll start looking for the Pitbull low around the 10th. 11th, and 12th. I don't minimize it to just Friday. And for those of you that are unfamiliar, the expectation is that between Friday to Monday, we could see some bullishness. I think the PPI is probably going to be far more the reason, the catalyst for bullishness. But for me, Monday, Monday the 15th, we're going to be closed. This turns into Tuesday the 16th. We would expect that any low between the 10th, 11th, or 12th would follow through bullishly into the 16th, right? Now, would I then reverse it? I mean, I don't frankly pay that much attention to Pitbull lows unless there was a dramatic sell-off during the second week of the month. And I'm thinking, oh, this could fall into that phenomena. I will tell you this, gang, and I want to do more of this year in the Sector Secrets Mastery. As much as I'm a huge fan of Marty Schwartz, again, one of my favorite books, and as much as the Pitbull low is something we all talk about, I think that intraday seasonals, as they're known, something that I think probably Larry Williams has done the most research on that I've studied anyway. I like intraday seasonal work a little bit better if I'm going to find the tendencies of these rhythms. And if the Pitbull low falls in line with the intraday seasonal, which really uses the previous week's action to then look at what this week could do, that's the way I would look at it. But I really can't say I don't have the data, but it is primarily a bullish phenomena. So I would say you might be, Mike, you might be better off trying to look at some intraday seasonals for that hunch of yours, because you might be spot on and it might be a little bit more seasonal work. So that's something we're going to definitely dive into again, I think, in the mastery this year, especially with me wanting to temper what is, for me, I'm very bullish. So I'm going to be looking for intraday seasonal to make sure I'm not getting too ahead of myself. But as the old saying goes, you want to get attention, let's call it clickbait, be bearish. You want to make money, be bullish. So I think there's a lot of truth to that. And I think that would apply to that Pitbull phenomenon as well. All right. Next up, can I talk about the Russell 2000? What small caps drive it best? Oh, well, here's the thing, gang. Great question. The Russell, two things. Let's get the obvious out of the way. Let's never, ever say again, the Russell leads the market. I don't know where that nonsense started. Let's kill it now. If you look at the data, if you look at the trends, it's just a bozo no-no. Not true. And it has nothing to do with what the Dow, S&P, and NASDAQ are doing. So let's start 2024 with our brains clicked on, question dumb things that are often repeated. And one of them is the Russell lead. So let's get that out of the way, which I know is not your question. The second part of it is what drives it. Awesome, awesome point to make when it comes to the Russell. It's not high concentration weighted. The Dow, small number of stocks dictate what that Dow 30 is going to do. The NASDAQ, less than 6 or 7 stocks, the Magnificent Seven, dictate what the other, what the 100 overall are going to do. The S&P is probably the most ridiculous example. 500 stocks in the S&P, probably less than 10 impact the 500 as a whole. High concentration weighting means a small number of stocks or sectors dictate what the overall market is most likely to do. All right, here comes the Russell, which completely does its own thing for two reasons. Very few sectors and individual stock holdings in the Russell 2000 are shared in the other three big indices, Dow, NASDAQ, and S&P. So first of all, it does its own thing. The second thing is there's no high concentration weighting. All those 2,000 stocks are in a mosh pit of about 1% or less weighting. So there is no driver at the stock level. What I have found, and we do this a lot in the Sector Secrets Mastery, is that regional banks are probably your best bet as far as a high concentration weighted influence, and that's going to be at the sector level. So that's going to be KRE. Okay? All right. Thank you for the question. We're gonna myth bust a lot of nonsense that gets repeated about the market, and we're going to do it with data. And that is the way we're going to tackle 2024 and dominate. All right. That is it, gang. I'm out of time as always. Thank you so much for being here for Charts and Coffee. I do want to touch on this. William, there is a way that I look at earnings, And it's not about what the result necessarily is. It's really about what was the lead up. I do not believe in playing earnings the way most people do, right? They pull up some cutesy icon laden calendar of the week and go, well, JP Morgan or whatever's on Friday. William, this is what I do, and it's listed in countdowntrader.com. Go back 6 weeks. Start asking yourself what stocks that have earnings 6 weeks away are starting to organize into an uptrend. 4 to 2 weeks out, start engaging those uptrends in a buy the dip. 24 to 48 hours out, get out of the trade. I don't want to play the scratchery lotto ticket of I'm going to guess at which way the market's going to go. I don't do that. I like to sleep at night, but that's just me. I love the question. So the takeaway is this. We've been bullish JP Morgan going into earnings. This is an uptrend that has been going overall higher, and before earnings we get out. Now, some traders, when we've already scaled out 1 or 2 times and we're down to say our last third or quarter of the position, some traders say, Rag, I've already realized the profit. I've got a cushion. Now with that small position left, can I see if I can hold through earnings? And that's always a choice, but only after we've had a winning trade, scaled out once or twice, do we have the luxury of saying, hey, Rag, could we see follow through? No reason for me not to be bullish. Look at that. Gang, if you're looking for a way to understand momentum in a time-tested, I mean decades-long time-tested way, look at the top row, green. Any reason to be bearish? Negative. Look at the trend, green. And that's the follow-through we're seeing today, isn't it? 74, almost 75, 175. So hope that makes sense. Be good to each other, gang. I'll see you on Sunday. I know we've taken a couple top-tier Outlook sessions on Sunday off. I will be back this Sunday with top-tier Outlook. I'll see you then. Be good to each other. We're closed on Monday, but I'll see you on Sunday. Be good to each other, gang.